Hi, live from New York. Oops, no, live from Main Street.
Happy New Year, everyone, 2017. This is Live with Main Street. And Jim is in New York. You can see that on the background.
Yes, live from New York. Here we are.
There we go. Hi, Eric. Well, good to see you, everyone. Everybody knows that January is one of those months that when the new year comes, we set resolutions for ourselves to do better in lots of different areas in our life. So we thought that it would be a good idea to focus on financial wellness in this month, and that's what we want to talk to you about. So I want to start by just defining what financial wellness is. So I look at, or I think of it as a comprehensive and holistic look and assessment in somebody's financial health, right? It involves everything. And it actually happened to be that MainStreet is the type of company that loves to do those kinds of assessments. That's what we live and breathe. That's the comprehensive financial planning that we like to practice. So what are some of the areas that we want to discuss today that actually involve financial well-being? Eric, do you want to start with addressing the first one?
So for me, it's really making sure you're living within your means. I know that's something a lot of people say they're going to change, is how much money they spend. And I think maybe they set their goals a little lofty, but yeah, definitely living within your means. Not necessarily living like a monk, but not going out and maxing out your credit cards and everything else.
Yeah, I like that idea, as well as I focus a lot with not just personal finances, but all of our clients is, do you have an understanding where your money is coming from? I know we all get a paycheck. We have a job or we have a business, but then on this other side, where is the money going to, right? Where are you spending? This is very basic, right? And many of you may think, well, I'm already doing, but are you really doing it to a point where you're not stressed out about it? The amount of inquiries that we've gotten to start financial plans for clients, or not just at this time of the year, but in general, a lot of them have to do, or clients talk about the fact that they don't have a handle on their expenses and their spending. So I invite you to at least consider that, because that's something that everyone could do. You don't need to be a financial planner, or you don't need to have a financial planner by your side. So the next area that we want to discuss is, so once we get a handle on our expenses, we know where we're spending our money, we know where our income is coming from, and maybe perhaps we need to earn more income because it's not enough. Now, let's think about, what is it that you're trying to achieve, right? We all know a famous book by Stephen Covey, The 7 Habits of Highly Effective People. So one of the habits is begin with the end in mind. So that's where financial goals come in. What kind of financial goals do you have for yourself? You may have not even thought about it, but I'll give you some examples. Retiring is a financial goal, but in financial planning, what we like to do is we like to have precise goals. We like to identify how much capital these goals might need, and we'd like to identify the date. When might they happen? Another goal might be buying a home, buying a new car, or paying your debts off. Those are the kinds of things that you need to start thinking about. And once you identified your goals and you sort of laid out a roadmap for yourself, then you can start thinking about, okay, well, what kind of investments do I need to have so that these investments can supplement your financial goals? Now, Jim, I know you just recently wrote a blog about on this subject. So could you comment for our listeners about, once we understand where our income expenses is at, we now have our financial goals, what do we do next? How do we keep it all together?
That's a good question, Anna. Monitoring is a really important aspect of financial wellness. You have to know if you're on track or off a track. And so the beginning of the year is a good time to look over last year's expenses. And there are various tools that we supply our clients, or we recommend to people in general. One of them is mint.com. Both you and I have been using it for a number of years.
We have.
And if you can electronically capture your expenses, change some of the allocations, because sometimes merchants, when you're you're putting it on the credit card. Merchants don't always classify all of the elements in your bill exactly right. My perfect example is Costco, where I have food, I have clothing, I have business expenses. I have to go in and adjust my accounting, but it only takes a few minutes a month to do that. But if you can aggregate things passively, and then you can look at it on a weekly, monthly, it's automatic, it comes to you in an email summary. But on an annual basis, by category, look at your expenses, see how they changed over time, and then sort of aggregate them from the biggest to the smallest, and then start focusing on the biggest ones to see if there's any way that you might be able to save some money, and therefore redirect that towards saving for other goals, financial goals that you have. So monitoring your expenses is critical, and that's the first stage. Also, adding up all your investments, especially ones in the taxable accounts, because the end of the year statements will have that information, how much interest and dividends have been given you over the course of the year. And then coming up with a revised financial statement, so you and any of your family members who are interested, or maybe your financial planner, you might send them a copy, but just like I sent mine to Anna, who's my financial planner. So you have some idea of your status, and then it's time for what Anna has always called a money date, where you talk to your spouse. In my case, I had a money date, talk to my spouse and say, this is where we were last year, this is where we are this year, we're better off, and then what's going to happen to our budget this coming year. And you have a basis for discussion because you know where you've been, how far you've come, and what your opportunities for saving and where your expenses are going to be. That's wellness.
I like that. I like that you borrowed my money day concept, because hopefully that's one of the exciting things that many of you can incorporate. Eric, you have something to add on the implementing?
Doing it the way Jim suggested, it gives you the opportunity to set up benchmarks. So quarterly or monthly, you can see how you're doing for your annual goal, and then checking the annual review of with Mint for the how did I do. It also lets you check yourself. Are you being realistic about where you thought you were spending money or not? Maybe you're eating out a lot more than you thought you were. So it gives you the opportunity to check yourself and just say, hey, I need to be a little more realistic and be a little more honest.
Yeah, that's true. Lately, everybody is, and I see a lot of commercials, even Apple had sent an email yesterday that you can wear one of those wrists, right? Or you can wear an Apple Watch, and it could track the whole life, right? Your steps, what you do. So I was just thinking, okay, well, the way that we're proposing to do something like this is to use Mint, where it could track. And the purpose of tracking, right? It's to be aware. Because if you're not aware, and it doesn't have to be finances, think about other parts of your life. If you really don't know how much calories you eat or how many steps you take, or if you do enough exercise, how would you know if you're making progress, right? So those simple things is what takes to put a well-rounded financial life for yourself. And on the last note, and unless Jim and Eric have more to add, what I want to say is that it's never ending. We shouldn't think about financial planning or having a good financial plan as a one-time event. It is not. Our life changes from day to day, from month to month. And yes, there's some things you can do yourself, and that's great. But if there's a point in your life where you need help, obviously reach out to a financial planner. But remember, it's an ongoing event. And so I just propose to buckle up and prepare for the ride. And I hope it's an enjoyable ride. And actually, you can make it to be enjoyable if you follow the steps that we're suggesting. So be aware and stay the course. Eric, Jim, those are my last points.
Good. I would say the result is satisfaction, knowing where you're at, how you're going to get there. You've got a plan. Yes, things change, but if you know what your benchmarks are, like Eric said, you'll get some really good satisfaction about being on track. Eric?
We've talked about it in the past too, is having an accountability partner. Again, just having that one person or a couple people that can be your cheerleader when things are going well, and give you that arm up when things aren't going well and you want to quit, and just be there to really help you out.
Yeah, well, we are your cheerleaders, so we'll be back next month. Let us know what topics or questions you want us to discuss. Again, wishing everybody a very prosperous 2017. It's still kind of not clicking in my head that it's 2017, but we'll get there, right? Happy New Year. Thank you, Eric, and thank you, Jim.
Bye now.